Markets retain a steady momentum after trading flat for most of the day. Nifty continues to hover around 21,450. We're tracking 3 new listings today. Motison Jewelers lists at a premium of almost 100%. Suraj Realty and Muthoot Microfinance list at discounts of about over 5% each to their issue prices. Nifty IT remains in the red on the back of Infosys losing out on a $1.5 billion AI contract. And Jaykumar Infra's shares rally as CLSA hands out a positive report. The stock's target has been raised to 720 rupees from 385. CLSA sees the firm getting large orders in the near future. And after opening with stellar 3% surge, Adani Green extends its gains. Investors are gung-ho on the firm, which is expected to raise $2 billion by next year. And COVID cases continue to increase in the country. 328 active cases have been reported in the last 24 hours. Hello and welcome. You're watching Large Trades. I am Agam Vakil, and in this show we talk about bulk deals, block deals, and plenty of volume buzzers, which are in fact a buzz at the moment. But before that, let's take a quick look at the markets, which are in fact doing reasonably well at this point. We are looking at benchmarks advancing to a certain extent, holding on to gains, and trading near days highs as we speak. But it is the broader markets which are seeing a little more traction. So the mid-cap index specifically is up and about, and we are seeing gains there as well. So if you consider the mid-cap index, where we are looking at about 0.8 of a percentage point, it's given up some bit of its gains. But even in the mid-cap space, we're looking at gains at Tata Chemicals, which is up around 7.3%. We have HBCL up 4.6%. Laurus Labs is also doing well in today's day of trade, followed by Deepak Nitrite. And on the losing end, we don't have too much to speak for. We do have some weakness in Sun TV, Vodafone, along with Jubilant Foodworks. All of them losing out between about 1.5% to 2%. In general, on the whole, where we continue to keep an eye on the markets, but for now it seems like another day of consolidation. And even though the benchmarks are up and about in the green, it's been fairly quiet on the volumes front. So that is something that we need to keep an eye on as we move into the final hour of trade. That said, let's talk about one company which has been in the news, and that's Anupam Rasayan, which has signed a letter of intent for about, currency converted 507 odd crores with the Japanese chemicals MNC. And we have Vishal Thakkar, who the deputy CFO of Anupam Rasayan, who's joining us to give us an update on the same. Vishal, good morning. Thank you so much for joining in. Pardon me, good afternoon now. If you could just tell us about this specific deal and give us a little more details in here.
Hey Agam, good afternoon, and thank you for getting us on this show. Merry Christmas to you as well. If you talk about the contract that we have signed here, this is a contract which is a 9-year initial first length of the contract that we'll have, and we'll commercialize it in this year itself, a volume, and this is basically with a large Japanese MNC, as you mentioned. This is into polymer. This will be a high-performance thermoplastic polymer. It will have an application in defense, in semiconductor, in electronic chemicals, and in high-performance industrial machinery coatings as well. So it's a very, very niche product, which is right now manufactured in only 2 geographies right now, two countries, and in India will be the first manufacturer that. And this, if you really see, is one of the playing out of our strategy of Japan and polymer. If you look at it, this is the 5th product that is in the polymer segment that we have signed an LOI for. And in Japan, this is the 4th Japanese customer that we have added in last year and a half. So really very, very, very interesting growth that we are seeing here.
Right. Well, that's an interesting point that you made because my next question was, in fact, to do with the inroads that you are making in international markets. You already suggested that this is the fifth customer that you have added in Japan. Can you tell us a little more about the contribution from export markets at the moment and what it can be as far as FY25 goes?
So, see, we have been largely export-led company. If you look at it, over 60-65% or even more than that is typically our exports annualized. And I think that number will be there because of our continued demand. If you look at it from a geography point of view, Japan has become a very interesting one. If I would just tell you that our CEO, Mr. Gopal, had led a sales delegation last month. And the kind of traction and kind of interest that we have seen from the Japanese clients, both for polymers and for fluoro products, is quite interesting. In fact, this LOI is also a very crystallization of that conversation that we have been seeing here. If you look at from an America as a geography which is now expanding for us. And if you look at it, that itself also has been having a lot of interesting conversations that we have had 2 months back. Mr. Gopal, our CEO, had visited Japan, America as well, and we are seeing a lot of very, very, very interesting conversations. And see, in the business that we are in, which is a spec-chem business, and especially in the more specialized, very niche and very high-performance polymers and those products, typically you will see that the time time from R&D to the commercialization is anything between 3 to 5 years, and that's the kind of time that we have invested over the last 4 to 5 years, and now we will see that that is resulting into some delivery of products and LOIs. And as we go forward, we see that there are large portfolio of products, 30-40 new products that are in a pipeline on the polymer side, which will where we will see a lot of interesting conversion that will happen. So to my mind, I think this is an industry. This is where geography-wise, Japan and Americas will lead the growth in the near term, and Europe will continue to contribute our growth as we have been seeing in the past as well. Right. So yes, very, very interesting growth that we are seeing here.
Right. Vishal, I just want to touch upon the agrochemical space in terms of business verticals. I believe over 2/3 of your revenues comes from there. My question is that we are getting reports that there has been a little bit of a challenge when it comes to oversupply, especially from the Chinese markets, and hence there has been pricing pressure on products. Can you tell us a little more about that and whether or not it can, in fact, have some sort of an impact when it comes to earnings?
Okay, so let me give you on the pricing side first, and then I'll talk about the long-term demand. So pricing, see, we are into business which is classically a business where we are a CDMO, our CSM player, and all our costs are passed through. So in that sense, we historically, if you see, our margins have been in the range of 26 to 28%, and will continue to be there. So I don't see that to be a bit of a challenge. Both, if you look at when the prices were rising, our margins were stable. Prices are dropping, our margins are stable. When the prices are flat, also our margins will be stable. So that's something which will be fine. In terms of demand, if you look at the secular demand, even from the agro side, we don't see too much of a impact there. Because if you look at a long-term demand, India as a geography, as a very reliable supplier of niche and very high performance chemicals, both across agro, pharma and polymers, we see that demand is continuing. Quarter to quarter, I would refrain from mentioning on this quarter and a couple of quarters here, because we are at the back end of the quarter as well. So that we can discuss once we get publish our results. But from a secular point of view, long-term growth point of view, I think India is in a sweet spot. The kind of reflection that we are seeing and kind of traction that we have seen in our conversation with the customer, I think that remains consistent to me.
Right, Vishal, over the last 3 years, we've seen a very, very strong growth coming in for the company. At this point in time, what are your utilization levels, and if there are any capital expenditure plans that you guys have earmarked for FY25 going in?
So if you see, last year we had done a QIP and we had announced a capex of 670 crores, which is in the process, and one of the the 3 plants that we have planned out should be commercial, should be live by this financial year end, and the other 2 should be in the first quarter of the next year. So practically, we would have had a significant addition in our capacity. This capacity should give us enough revenue potential to take care of the next few years of my growth. And then we will, after completion of this capex round, we will then sit back and review that do we need more capacity and when we need that capacity.
All right. Vishal, since we have you with us, from the latest updates that we have, well, your receivables have increased and have gone up to a certain extent. I want to, understand your capital, your working capital cycle, which you, of course, have guided us and perhaps indicated that there should be a reduction going forward. Can you take us through these updates at this point in time?
So I would say I would not want to specifically speak about this quarter and the next quarter because we are really in the zone of no speak phone kind of a thing. But I would say that the kind of guidance that we have given on the working capital side, we see that we should be able to be in the range that we have talked about. So I would be happy to answer that question. Let's say in 30 days time when we announce our results. Hope that is fine by you for now.
Okay, Vishal, we look forward to that conversation. Thank you so much for joining us and taking us through the latest letter of interest that you've had, along with the several outlook updates that you shared with us as well. Thank you very much. And well, on that note, we'll take a break. But on the other side, we talk about last trades and a lot more. Stay tuned in. Welcome back, and now we shift focus towards large trades. And right at the top of our list, we have Jaykumar Infra projects. Now, we've had a broken note in the latest which suggests that there was, in fact, deep value and probably still there is when it comes to Jaykumar Infra. And that's also one of the reasons why we have seen that company locked in an upper circuit of around 20%. I'm going to say no more and get in my colleague Anushi Vakharia to give us more updates on this. Anushi?
Absolutely. So the stock might be one of the stocks of the day today, with the volumes buzzing about 11 times its 30-day average. So just to give more details on what CLSA exactly highlighted, firstly, it had upgraded its stock price to rupees 720 compared to rupees 385 it had earlier projected, which implies an about 40%, more than 40% upside if you compare it with the current market price. Now, what they are saying is that this is this is a play on the urbanization capex, and it sees about large order wins in its new age climate resistant projects. So this, along with the focus on metro projects, should be in highlight. Along with this, we are seeing about 25% CAGR growth over the next over the FY24 to 26 period, which is another upside that we can look. The company in its H2 FY24 update, it has about 962 crore of order wins in Chennai and Mumbai respectively. And if you look at the company's H1 FY24 order book, that again recorded about 39% growth at rupees 16,447 crore. Now, about the growth outlook that the company had given in its latest earning highlight, it had revised its revenue growth to 16 to 17% versus the 15% it had projected earlier, and it also sees about 1% improvement in its margin in the next coming 8 quarters. But what is more important is we also spoke to the management earlier today. So let's just tune into and listen to what they had to say to get more insight.
In terms of the revenue for the Q4, I wouldn't say that it would add anything to it, because the orders that we have bagged is mainly in Q3. So the top line to show the results would take some time. But yes, FY25 should be somewhat better than what we have expected and the guidance given by us for FY25. But it would be too early for us to comment on the real impact, because it depends on how the project moves. So, but yes, going forward, the top line should be much better than what we are expecting. And for the new order books, I would say that we are still in the process of bidding for projects worth around 30 to 35,000 crores. So in this coming 6 to 9 months time. So I think even FY24-25 should be a good year with respect to order books and the top line.
And there is yet another stock which is in fact trading at a near 4-month high, and that's Alkyl Amines, which is in fact also advancing on the back of very strong volumes. Let's get in Varsha to figure out what's really happening here. Varsha, what are you picking up?
So, Agam, as you rightly said, so stock hit intraday of 9% in trade today, and volumes were over 7x its 30-day average. Now, if you see, stock has jumped almost 5% in almost last 14 weeks. Now, coming back to how was H1 FY24 over H1 FY22, but before that, Agam, also if you see, a lot of chemical companies today are in focus. I mean, every other chemical company has gained today. Now, this is on the back of volumes. We don't know the exact reason behind this rally right now. But coming back to Alkyl Amines, if you see the H1 FY24 numbers over H1 FY23, so it has been difficult, which has been led by margin decrease in margins, and this was on the back of domestic competition and significant competition coming from China in 2 to 3 products. But company hasn't been able to pass on the raw material price increase to its customers, and also they are also sacrificing margins when it comes to to gain that market share. Also, company expects improvement in profitability in FY24, and the challenges from the Chinese competition that company is seeing is expected to subside over time.
Right, so let's not forget we certainly have mixed cues coming in from the amines space, and while we do have advances in alkyl amines, we also have Balaji amines also, which is buzzing in trade at the moment. This is as far as amines are concerned. Varsha, stay on with us and tell us a little more about the entire chemical industry in terms of what we can expect going ahead and if there are any headwinds at all.
So, Agam, if you see, every chemical company is facing headwinds right now. Now, this is on the back of China dumping, which is happening. So, actually, there's no demand in China, and China is dumping back its products all over the world at such a low prices, which is affecting the realization of chemical prices, and that is affecting the revenues of all these companies and margins also. Now, if you see there's also destocking across industries, which is affecting the numbers. Now, this is expected to stabilize going forward. But what we can expect ahead is everybody, including the management commentary, if you see, or the brokerage houses, what they are saying is the numbers would be good. We can see the improvement from Q4 FY24. But overall, if you see, FY24 may be a muted one or degrowth in terms of revenue and margins. But from FY25, everybody is expecting a good growth, especially in specialty chemical sector. And maybe in FY25, specialty chemical sector will yet be the darlings of investors.
Yeah, I suppose that's the hope in any case from the point of view of a lot of investors. Varsha, thank you so much for joining us and getting us those details when it comes to the chemical spec sector and, of course, mines in general, which have been up and about in today's day of trade. But from there on, we talk about the final large deal of the day, and we have Heritage Foods now, which is in focus once again on the back of high volumes and also a good advance coming through. Let's get in Mahima to give us an update on this one. Mahima, good afternoon.
Good afternoon, Agam. So as you rightly said, Heritage Foods is buzzing on the base of volume today. The stock touched an intraday high of 9.6%, and this is basically on the base of a bulk deal that has taken place. We don't know the buyers and sellers yet, but approximately 52,600 shares were exchanged at a price of 286 per piece, and so far we've seen that the shares have jumped so much, first time in the last 5 years. Also, the stock has been trading consistently higher in the past 6 days. Now, if you talk about the stock performance as a whole in the past 5 years, 2019, 2020, 2022, the stock has given negative returns. So in 2023 itself, the stock has given 64% return. So this year definitely has been a very good year for Heritage Foods if we see. Also, the financial performance for Q2 FY24, we see the revenue was up 20% and the PAT was also up 18%. If we talk about the analyst recommendations, analysts are bullish on the stock. Out of the 3 recommendations, all 3 say buy. So overall, if we see, this year has been overall a good year for Heritage Foods.
There's no doubt about the fact that we've seen good gains coming through for Heritage Foods. Mahima, thank you so much for getting us those updates on a company which has been relatively volatile with respect to a lot of its peers and has been over the course of the last few years. But I reckon for the sake of all those who are invested in the company, they are looking at a lot of relief and of course also enjoying the kind of gains that the company has seen. So that's as far as Heritage Foods is concerned, and from there on we move on to listing action, where we have 3 companies which made the debut on the last street today. That was Muthoot Microfinance, Suraj Estates, along with Murchison Jewelers. Now, while Murchison Jewelers listed at near 100% premium to its issue price, we saw discounts when it comes to the other 2 listings, that is Suraj Estates and Muthoot Microfinance. We spoke to the managements of all the 3 companies, and this is what they had to say with respect to the outlook as well as what we can expect going forward from the companies. Listen in.
Our quarterly first result was very good, like compared to last year, as you can see, and as seeing the growth trend change in the market, like demand is also changing, more festivals also coming, so we can see a demand change, and we think that we can have a good growth in that.
How was the first half of the year, September quarter?
Yeah, it has been good compared to last year. We did the percentage of revenue has increased, and as you can see, the PAT is also increased. The PAT margin is also like it is around 6.5%.
First of all, it's a proud moment for all of us. to be listed on stock exchange today. And Muthoot Microfinance 13 years ago when we started, Mr. Thomas Muthoot and myself had the vision to build an institution which creates impact at the bottom of the pyramid. Today with 3.2 million customers, 10,800 crores of asset under management, 1,340 branches spread across 18 states and 329 districts, 12,200 employees, we feel that we have created an institution which is sizable and creating its own respect in the market. I think the growth is immense, the potential is immense. As we all know, there are around 17 crore rural households which are potentially microfinance customers. Today the industry caters to around 7.5 crore households, so that much more potential.
It's an entirely fresh issuance of shares, so we plan to raise 400 crores, out of which 285 will be for the debt repayment or prepayment. 35 crores is earmarked for acquisition of new land, and the balance would be obviously a GCP portion.
Right. So when you say acquisition of new land, that means that you're obviously planning to launch a few projects, because I assume that you technically take the third party to construct the sites, if I'm not wrong. So when we talk about new launches, do you have any sort of targets in mind, or do you have any sorts of period that you're planning to have these many launches at these many areas, and specifically which geographical area, if you could help us understand that?
We have about 3 land parcels on Mount Perry. So I think that would be the next market we'll be targeting. So Bandra would be the market we'll be targeting next. And we have a commercial development on Tulsi Pipe Road. So it's about 1 lakh of square feet of carpet. Okay. So that would be the launches which we will be targeting. 1 in commercial and of course about 3 in residential.
And that is all that we have for large trades. But don't go anywhere. On the other side of this break, we get you India Markets Close. Stay tuned in.